In this video, guys, I want to quickly cover the concept of dynamic position sizing. Stay tuned. Hey traders, warm welcome to you. Thanks so much for joining me. All right, so in simple terms, how do we size our bets or our trades? Right, we've got fixed position sizing and dynamic. Now fixed, we're not going to talk about too much, but just briefly is where we say, hey, I am risking X dollars or X percent of my account on each trade. 1%, 2%, $100, $1,000, $10,000, $50, whatever it is. It's a fixed value and you take each trade with the same value. And the argument for that is that you say, I don't know where my next big winner is going to come from. I shouldn't vary my bet size. I should be very consistent and know exactly how much I'm going to risk on each trade and keep that uniform throughout until I'm at a period where I'm adjusting and scaling up my whole operation and risking a little bit more. My R unit becomes a little bit more. And that's perfectly valid, right? But then you look on the other side of the coin, and by the way, I give my opinion on this, what I think personally is better at the end. But the other side of the coin, or the flip side, is the dynamic position sizing. And the dynamic position sizing trader says, hey, do you know what? I'm not going to bet the same amount or risk the same amount on each trade. I am going to increase my position size when I think I have edge, more edge. Now, the counter argument to that fixed trade would be, well, when do you know that? The counter argument back, the counter argument would be dynamic trader who says, hey, there are certain trades where I just have a good feeling, they tick a lot of boxes, or I think the probability of success is high, and I think the chance of a high return on my risk, a good risk-reward ratio on the deal is high too, and those are the ones I'm going to swing for the fences at. I'm going to take the consequences, whatever happens. So imagine this, 4 trades. The size fixed column would be, hey, I'm just going to risk 1R, 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 1R. Now this the size dynamic guy might say, okay, I'm going to risk 1R here, I'm going to risk 2R here, I'm going to risk 5R here, and I might not even take that trade. And you go, well, how are they making this decision? This is when it comes into grading your trades. This is the kind of angle that I like to look at it and say, okay, we've got a grading column here. And this is obviously missing from the fixed size trader, the size fixed trader, because he doesn't need to, she didn't need to understand the grade because it's fixed. Like it's an R unit, R unit, R unit, R unit. That R unit comes from the trading plan. But now the dynamic trader goes, well, actually, you know what? This is a real A plus setup. This is an A setup. This is a B, and maybe this is a C. Okay, whatever grading you use it, 1 to 5, A to B, or whatever it may be. And they are using specific filters to grade that trade. And by the way, guys, price action program, I talk in depth about grading and how to grade this trade. And okay, spoiler alert, I'm a big fan of dynamic position sizing. I'm the size dynamic crew, but I understand why you want to use fixed. And let me just say this, if you are a developing trader, then adding an extra complexity to trading by adjusting position size, I don't think is the right thing to do. I absolutely think you should stay with a fixed position size, run with that, and then when you start to get some traction, go, hey, what are my best plays? How can I extract more from those and play that game? But when you're in this level, you go, okay, hey, A plus, I'm risking 5R, 5 times as much. Why would I do that? Because A pluses don't come along very often, but I need to see this, and you're very detailed documentation about what you need to see. It's not just, hey, I fancy this trade, I'm going to go in. No. It's like, okay, it ticks this box, this box, this box, this box. Maybe it's a very specific play that doesn't happen very often, but there's quite low risk to it. If I get on the end of it, it can give me a 10R return. It's well worth swinging for the fences on. And so you've graded that A plus. They're not going to come around every day, but when they do, you want to swing a little bit bigger for it. And then you've got an A, which is kind of okay, a good trade that you want to take and want to swing more for. Maybe a B is like, okay, yeah, that's all right, that's decent, I'll take that. And maybe a C, you get to a point where you'd normally take it, but actually, because you're being a little bit more aggressive with some of these other plays, you want to leave them. Or maybe you save a half R on those, or a quarter R. Maybe you trade in that way. And you're saying, okay, I still think there's edge there, but it's not going to give me a huge return. It's got a bread and butter trade. It's not really my thing to kind of divert my attention too much away from it, so I trade less. There's lots of things that go on through the mind when you're kind of using this dynamic position sizing. And the way to kind of get to this point is to have that experience with the fixed position size and go, hey, This is what I've traded. These are the results I've got. I've traded for a period of time. This specific, you pluck it out and you go, this strategy here is really effective. I like this. This has given me a decent return. I've got a lot of proof here that this is working well in these conditions. I can identify easily. That goes in my A+ column. This one goes in my A, and you get the point. And so you then categorize your plays and you go, and if you want to be really kind of good at this, good, is that the right word? You can be a judge yourself. You can go, okay, rather than kind of these arbitrary things, you can go, okay, well, if I'm risking there a total of 4R, imagine I'm risking 4R on these trades. I might go, well, actually, you know what? Maybe I'm going to split my trades up and still risk 4R overall on these 4 trades, but perhaps I'm going to adjust the way that I trade them. Maybe this one gets 3R, maybe this one gets R, maybe I don't even take the B and the C. So I'm still risking 4R, but I'm just skewing the way that the risk is placed depending on my appetite for risk. You might go, oh no, I'd like to spread it a bit more, that's fine, but you can do that. That's the game you can play. You know, there's sometimes, and you know, I know of it absolutely, I've done this, where there are setups that come along with the right seasonality, in the right setup, in the right environment, the right conditions, where I've gone, I can't not swing for this. I can't not risk a month or 2 worth of profits on this trade. And people might be, that's crazy. And okay, fine. That might be your approach, but you know, I know that this is the time if I really want to boost things and get a big boost in returns and grow the account, I've got to do that. I've got to be able to sometimes just put the chips in and go, man, this is a good hand. I've got to go for this and take the consequences if it doesn't work. But as long as you accept that and say, hey, I'm going to push those chips in and all the risks are minimized as much as you can, you've done your research on it, then fine. You know, you understand the risks, understanding this is a, you know, big boy and girls game, but recognizing that that's sometimes the way to do it. But I also appreciate the other side of the argument. Again, it's very personal, this. I also appreciate someone who says, that's crazy, because why would you risk all that on this? Why would you not just be consistent? And I get that. And that's why it's a very personal, your personality that dictates this. Whether you use dynamic position sizing, whether you use fixed position sizing. And absolutely, I think this is a more advanced technique because you've got to know when to do that. You can't just guess at it and say, well, I think that's a good way to do it. No, you've got to have some experience and the confidence as well to be able to push a lot of those chips into the table and go, okay, let's run with this and see what happens. And really kind of feel that moment when it's time to press it. Now, I've talked about maybe some extremes here. You can still play the game where you adjust slightly, right? You can maybe go, okay, max is 2R, min is half R. Rather than just doing R risk, R in each trade, maybe I can adjust between half and 2. And so you might play the game of, well, you know, C's a half, you know, A plus is 2, that's 1. You can adjust and play that game. So rather than the big spread of going, well, it's going to be 10R on that or 5R or whatever it is, maybe the max is 2R, 1.5R. So you can play that dynamic game once you've got some experience and understand which of the setups you want to grade as an A plus setup and which you want to grade as a C setup. Once you've got that knowledge and information, you can then start to move that dial and trade a little bit more dynamically with your position sizing, but not such a big lever like 5R and 1R. You can go, okay, you know, just 2R on that one, 1.5R, half an R, 0.75. You can just play the game slightly so you get the experience of trading dynamic position sizing without such a lot of pressure and potential stress when you rank that risk right up. So that's dynamic trade sizing. Let me know in the comment section below, guys, how do you trade? Are you on team fixed or are you on team dynamic? See you next one. Take care. Bye-bye.